As I sit here this morning, gold and silver are again reaching all-time highs. Gold now has gone past the $4,100 an ounce mark, and silver over $52 an ounce. So stay tuned, because this is going to be a very exciting update. We're witnessing truly a structural monetary recalibration. We're witnessing more than just a rally. This is not just like stackers and things like that, or even central banks. We're starting to see real FOMO kick in. We're starting to see these markets really start to drive precious metals. There's a lot of underlying things that happen, and we're going to talk about it. But before we do, let's talk about real quick the difference that became so painfully obvious today between Bitcoin and gold. I don't know if you saw what happened on October 10th, but it was truly amazing. There was a tweet from President Trump that literally tripped the market. Bitcoin went from $125,000 down to $102,000. But what really happened in this collapse was that many of the investors who were on margin got liquidated. Over 19 billion in liquidations, affecting over 1.6 million investors who basically got wiped out. Even one investor lost almost $88 million in this single day on a single liquidation. What happened to gold? Well, I think you know, it actually went up. Gold and Bitcoin are not the same. When people refer to Bitcoin as digital gold, it simply is not. Gold held strong. Gold now, as you know, last week, for the first time, breached the 4,000 mark per ounce. That's the 44th time we've had a record high this year, and it's continuing to accelerate after what we're seeing happening even today. Gold also is now being stored by central banks at greater quantities than even U.S. Treasuries. This is a fundamental change that hasn't happened since back in the early 1980s. We're seeing central banks, what I call smart money, dive into gold, and they're not backing off even with these higher prices. They're continuing to buy gold. It'd be really interesting to see in the future here if they actually move into putting silver on the books as well. All right, let's talk also about silver, because silver had an explosive week last week and is continuing again as I'm sitting here today. Breaking that $50 price was hugely important for silver. And that year-to-date gain up over 64 now more percent per year is breathtaking. We're seeing also what's happening in London with this silver squeeze and the lease rates that are happening. So let's dive into that just a little bit more. There's a lot of people in the inside of the industry, in particular with silver, when you're talking about bullion banks, you're talking about the LBMA and others. And basically what they do when they're going to make a product, they typically will lease it and then they'll buy the futures, which kind of sets the price at which they're going to sell it. It's very common for that rate to be 2%, maybe 3%. It shot up over 40%. That put an enormous squeeze on silver. And what it did was it caused silver spot price to be actually higher than the futures price, something we call backwardation. All right, let's now take some time and let's dive into the charts and look what's happening quickly with the economy, and then we'll move on to that explosive forecast. Let's start first and let's look at the M2 money supply. This is where the Fed's printing money. What you notice if you look at the very right side of the chart, you can see here that just over the last couple of years, we're starting to see a real acceleration in the government beginning to print money. This is going to have real impact on the dilution of the dollar's value. When the dollar dilutes, gold and silver go up. It's literally as simple as that. We also notice when we look at the Fed funds rate that interest rates are coming down. Of course, we know Powell is dropping rates, and we know he's likely going to do it in the future. The implications of this is that it creates inflation in the economy. It makes it easier for people to get capital, to do things, to try to grow their businesses quicker. It also creates price inflation. the federal government has stipulated that they want this 2% number. The reality is they're not there yet, and by dropping rates, it's going to accelerate. It's kind of a catch-22, and there's not much they can do about inflation now. Again, very, very positive for gold and silver. The odds of this happening, that the Fed's going to drop rates here in the next week or two, you can see now it's almost at 96% probability. The real question I have is, are they going to drop it more than once this year? And if so, are they going to drop it by more than a quarter point, maybe even a half? So there's some dynamic things happening in the market. You're seeing prices spike. These are the underlying reasons why this is happening. Now I want to take a look at something you probably haven't seen before, and this is the decline in U.S. international investment. What you see here is that this determines whether the country is a net creditor, which is a positive position, or a net debtor, which is a negative position. And it's an important indicator of a country's financial condition. If you look on here, this is coming from the Fred site. You'll notice down here it says the overall trend represents a significant and persistent weakening of the United States financial position relative to the rest of the world over the last 2 decades. You wonder why earlier we talked about how the central banks are moving into gold and out of treasuries. This is a core reason why. The dollar's weakening, the country's weakening, and these are things that are driving investors around the world to move from treasuries, U.S. assets, into gold. Another important indicator is unemployment. If you look here from July of 22, and as we work up, you can see unemployment is actually going up. Also, you'll notice that where the unemployment is being affected the most tends to be on the coastal areas. Look at California with unemployment in many areas greater than 5%. This unemployment, when the Fed looks at rates, is a key driver of why they choose to drop rates. So again, they're in that catch-22 between dropping rates to boost jobs and then knowing yet it's going to cause inflation. It's a very, very vicious cycle, one that gold and silver will benefit from. Let's talk about the cat coming out of the bag, and that's our federal debt. It clearly is accelerating. It's not in any way turning down. The result of Trump's tariffs have had no impact on the amount of money that we continue to borrow. If you haven't done this yet, I would highly recommend you bookmark this site, the usdebtclock.org. Here you can see in live numbers, as it's updating, that our debt right now stands at over $37.6 trillion. And just look at the numbers. Over here in the left-hand corner, you can see it continues to accelerate. Rising debt, rising inflation, lack of trust and confidence in the U.S. government, the things Biden did when he, for example, restricted Russia's assets and kind of taught every central bank in the world that you're now not secure holding U.S. treasuries. These things are all multiplying, and they're causing people to invest in a safe, secure, movable asset that they can take possession of and control their own financial destiny, and that's gold. All right, now the fun part. Let's talk about the forecast and what we expect for the week ahead. So it's important when we think about a forecast of gold and silver, we do need to pay attention to what's happening in the U.S. stock market. Right now, it's described as a parabolic final stage. All of the equities have accelerated in their valuations. If you look at things like the Buffett indicator, it's some of the highest it's ever been. It's the reason Warren Buffett has moved so dramatically to cash, because he is very concerned about this equity market. This is all happening while the VIX, which measures volatility, is in itself very, very low. This is a spike, and it's creating a great market again for our precious metals of gold and silver. You can see too that Bank of America now has just released today a revised forecast placing gold at $5,000 an ounce in 2026. But here are the true catalysts that I think we want to pay attention to over the next week and through the future. The Federal Reserve is going to cut interest rates, and that's going to happen this week. Those cuts are going to drive gold higher. The second area is the geopolitical fallout. When China came out and said that they were going to restrict the sale of rare earth elements, that absolutely panicked many countries around the world, President Trump included. That's why he sent that tweet that absolutely dove Bitcoin down through the floor, caused all the liquidations of all those traders. But it's also what's causing insecurity in the world. That is, again, when people choose safe, secure, stable assets. All right, so here's the bottom line and what I want you to pay attention to the week ahead. The technicals for our metals right now are overbought. So you're likely to see when gold starts accelerating now, you're going to see it pull back, go up, pull back, and consolidate. That's traders taking profits. That's normal and that's healthy. That's going to happen. So just be aware, this isn't going to be a straight line going up. The metals are going to move up and down, but the trend, which I often define as your friend, is going to continue, in my opinion, to accelerate higher. These catalysts are driving it. What's happening with the Fed, what's happening with our government, all of these things are creating a real opportunity for us in gold and silver. Now, I want to talk about an outlook. I've shared before that I use very proprietary models for my own that I use to measure where I think gold and silver are going to go. I'm now sharing with you what I'm seeing. And this to me is absolutely explosive. We're showing gold in my models going from 4,000, now 4,100, to 5,600 an ounce within 6 months. This is a dramatic increase in the price of gold. And if I'm being totally truthful, my model actually has it happening a little bit sooner. And with silver, it's even more explosive. From when I did this at $50 an ounce, now 51, almost 52, you see we're showing now silver moving up to about $85 an ounce. So it just seems impossible, but I'm just telling you, this is what my models are showing. And I want to be clear, we're not providing financial advice. We're not financial advisors. This is for education only. But I'm telling you directly, this is what the models are showing, and it is absolutely incredible. It's explosive. So you can see here for gold, projected over the next 6 months, that 4,000 to 5,600. And again, for silver, from 50, 51 now, up to about $85 an ounce. We are in an unprecedented period in our lives right now. For those of us that love gold and love silver and love stacking, this is the time to take confidence in what you're doing and continue the path. Use our auto invest. Use different programs to be systematic and disciplined in the way you invest, and always invest only what you can afford. So thank you so much for tuning. We're really excited to have you on the channel and look forward to speaking to you next week on our Monday Metals Market Update. Thanks so much and happy stacking.